Hey guys, it's Jorge here again. Welcome back to another interview here on the For Extravaganza Virtual Summit. Today I'm here with Jarrat Davis. He is currently the head of Forex at Smile Global Management, and he was rated by the rating agency Berkeley Hedge as the second best performing Forex fund manager. So he is a guy that it's gonna give us a lot of value, but this is gonna be a bit different from the other speakers because everybody normally oh, sorry about it. I just got back here.
That's okay. That's cool.
I'm gonna start again. Sorry about that. Hey guys, this is Jorge. Welcome back to another interview here on the For Extravaganza Virtual Summit. Today, I'm really glad of having this speaker here with us because he's going to give us a lot of value. He is Jarrat Davis. He's actually the head of Forex at the Smile Global Management, and he was rated by the rating agency Berkeley Hedge as the #2 at the second best performing Forex fund manager. But he is a different guy from what you have seen here on the interviews on the summit because he's not the typical technical analysis trader. Actually, he is a fundamental analysis trader. So he has a different view of what's going on in the market and what he's going to talk about today. He's going to go a bit about of his story, his background, and then he's going to explain is why he is here and why he is trading the fundamentals more than the technicals. So, hey, Jarrat, welcome and thanks for being here.
Thank you for having me. It's good to be here.
Okay, so I would like to start by knowing a bit of your background so everybody here in the summit can have an idea of who you are and where you come from.
Yeah, cool. So basically, I started trading as a retail trader. I decided I wanted to kind of like just have a business or a way of making money that I could do online. So that my goal originally at the very beginning was to, be able to travel. So I like traveling. I love living in different places. And I thought if I could earn money off the internet, basically, that would be, a perfect fit for my traveling. I could just earn money as I went. So I've literally tried pretty much every possible thing on the internet that you could do. I got scammed right, left, and centre. Was very naive. And basically, one day I found trading forex. I just did that advert on a currency exchange website, and it's I can't remember the exact words, but it said something like, "Why don't you trade currencies for a living?" or something like that. And I was intrigued. I've always had an interest in the market, so I was like, "Okay, this sounds interesting." So I clicked that button, and then basically the rest they say is history. And I kind of went on my journey, and ended up where I am today, basically.
Well, that's great. And where have you been traveling, and why were you looking for that at that time?
Well, I don't know. I just went. I always wanted to do it because I went when I was younger. I went backpacking. I backpacked around Australia, um, and it was just like I think it was the freedom. It was a fantastic freedom of just it's just you on the road. You don't really know where you're going next. You haven't got a plan. Um, but when you look back, you've done all this stuff and you've been to all these cool places. So I think it was the freedom element of it more than anything else, and the opportunity to experience different cultures and different places. And like since I've obviously been trading, I've lived in I've lived in places like Canada, Switzerland, the Canary Islands, lots of different places in Europe. I go to the US quite a lot. Australia, obviously, I went to as well. So I've literally really have done that. The place where I've reached actually did help me achieve that kind of goal. So it's been really cool.
That's great because I know that a lot of people that's watching us right now are thinking on trading on the forex market or maybe trading in some other markets because they want to leverage their life on that and start having a more freedom, more they can spend more time with their families and things like that. But it's great to know that you start traveling and then ended up being a hedge fund manager. How was the transition from starting as a retail trader and ended up as a hedge fund manager?
Um, the transition was very, it definitely wasn't in a straight line. It was like kind of like, very different directions, lots of stuff, ups and downs. Um, and, but it's very enjoyable. Now looking back, the process is fairly straightforward, but if you don't know what you're doing, you don't know where you're going, it's quite tumultuous. Um, my particular journey, there's a lot of luck involved, I'll be honest. Meeting the right people at the right time, um, performing at the right level at the right time. There was definitely luck involved, but at the end of the day, what do they say? I think the saying is that luck just is simply a combination of preparation and opportunity. So, I was obviously prepared and working hard so that when those opportunities came along, I could take them. But yeah, it's not a straight line, but it's been a very enjoyable process. And when I look back, the progress from just being some retail trader that doesn't know what a PIP is, basically, to now to like managing client funds, to then being made a partner in a big firm. Yeah, it's been a fantastic journey.
When you started as a hedge fund manager, it was your own hedge fund or you were hired by someone? Or how did you just said about, that life gave you those chances, those opportunities, and you took them. Uh, but how was that decision of start giving that like that step forward to growing your business?
Okay, so as I said, it was an element of luck. So, for example, the first fund that I traded for was a very tiny little startup. Like just a few $1 million. It was nothing basically, and it was this guy who was Australian. He based it in Hong Kong, and the way I met him was I was trading quite well, and I was looking for ways to basically turn that into my income. So I didn't really have very much money at the beginning. So I was trading what bit of money I had, and I was looking for other ways to leverage that. And at the same time, I had a Skype room, like literally a Skype. In those days, you could have like a chat room, an open room where people could come in on Skype, and you could have like 20 or 30 people in a room, and you just chat all day, basically, share your trades. So I was just doing that with people. I wasn't. It was just a free thing. I don't know where these people came from, but in the end, I had like 40 people in the room, and we were just chatting. I was sharing my trades. And anyway, it came about that after a few months, one of these guys was this guy who just set up this like tiny little fund, and he'd just been watching me and talking to me. And he just said one day, he said, "Look, this is what I'm doing. I've got this money under management now, this tiny bit of money. Would you like to come and be a trader for me? I've seen what you can do. I like it. And, I'd love to try and work with you." And at that time, that was just like a massive opportunity for me. But it was just pure luck that the guy was in the room, I was in the room. We came together somehow, and he gave me that opportunity. And within 6 months of working for him, I ended up trading my first $1 million account. And then that was really the foundation that took me on to, becoming where I am now. So the fund wasn't mine. It was just purely, I was just trading someone else who'd done all the hard work and set their own fund up. And yeah, that's how it all started, basically. That's where the luck came in.
Well, it sounds great, and what I like the most there is that you were sharing your thoughts with a lot of people from the beginning. Because I know that some guys think that if they have a good strategy that it's working, of they have execute some good trades, they start thinking that they start teaching people or sharing that with some people, that's going to go the wrong way, and maybe they start losing money, or maybe some others are going to win. I don't know if there's some twisted thinking about it with a lot of guys, but I think that the part of start sharing your knowledge from that point would uh, put you in that place in which people can hear you. So I think that that would be kind of a tip for the guys who are watching us right now, of don't be afraid of share your trading and your knowledge, because you never know who is learning and who can really appreciate what you were doing. So that's going to open a lot of doors, like just happened to you.
Yeah, 100%, definitely. And ever since then, every time, if you put yourself out there, you never know what opportunity is going to come your way. And it always leads to bigger and better things. So it's definitely something that I've always done and will always probably do on some level.
Great, great. When you start trading at the beginning, did you start with the technical analysis, with the fundamental analysis? You mix it both. How were your first steps in trading?
Yeah, so I obviously, because I was a retail trader, because I was just literally searching Google for, you know, forex trading systems and how to be a forex trader. All the only things that ever came up were technical stuff. So I was trying different patterns. I was trying different strategies. I was trying to buy secret systems. I did all the stuff that everyone does. So my focus was purely technical at the beginning. And then I basically met a friend. One of my friends was dating somebody basically. And this guy she was dating was a trader. And he didn't trade FX, he traded equities. And we've since become best friends. He's like my best friend now. But at the time, we met this guy, and I was like, oh, because he was a trader, I was like, that's really what I want to do. That's the space I want to be in, and I've got this interest over here. And when I talked to him, he got educated after university. He went to trade at a firm in the city. He learned all the ropes, and then he took his own money and then he traded it. And he'd been like living off his own account for like a few years when I met him. And he had a nice car, he had a nice house. He never seemed to do anything. He always had money, but he didn't have a job or any other way of doing, he just kind of sat at home and did his thing. So I talked to him, and basically he introduced me to fundamental analysis and the importance of it, because he purely traded fundamentals. He didn't even know like what Fibonacci was. He'd heard of indicators, but he had no concept of them. And I just found that fascinating, considering I was like 100% these things. And this guy over here was just clearly making money from the markets, and he'd been trained in the city, and he had even no knowledge of these things basically. And like that kind of made the penny dropped in my mind. I was like, well, like there must be something going on here. And then as soon as I learned from him and I started applying that side of it, my trading just literally took off. This was a night and day difference. And that's what really put me on the journey effectively. So it was only when I introduced the fundamentals. Now the technical skills that I still have quite a lot of technical skills, price action and stuff like that. And I can do all that and I understand it. And when you combine it with the fundamentals, it's just infinitely more powerful. So I do combine the two now. But yeah, my beginning was definitely very much entrenched in the technicals alone.
And then how did you start managing or leveraging your mindset, seeing your trading as a business? Because I'm pretty sure that when you started for Have More Freedom and you saw your friend living off from trading, that was a bit later on your journey, you start seeing your trading as a business. How was your training or your leverage on your mindset at that point?
It's a good question. Like the very first thing I wanted to do was to simply I wanted to make money, make an income. That was my first goal. I didn't really care about like I said, I wanted to travel the world. I wanted to have a laptop, and I wanted to make a living from the internet. That's it. It doesn't matter. Like at the beginning, there wasn't even necessarily trading, just to make a nice income that I could do anywhere. But then as you develop and you get better and you achieve your goals, the goals change. So then the next goal was I've cracked this. I can make money doing this. I'm consistent. So now there's a load of people out there that can't do it, that want money managing, and it was just like a progression. So I was like, okay, so then this guy approached me and said, trade for this. And then I had the idea, okay, I could get my own clients and build my own business. And then eventually you have your own book, and then you try and get traders in to run that book, and then you want to build your own firm. And then the goal ultimately is to have a hedge fund and, you know, and become a billionaire. The goals just change as they go. So my mindset at the beginning was very simple, but then as you achieve each goal, you just almost like the clouds clear, and then the next goal becomes, and then that's when you go for. And that's basically how it's gone for me since those days.
Okay. Is there any difference between trading like a regular retail trader account and $1 million account? Because a lot of people that start, you know, like losing money, they have a small account or something. They suddenly they can say, hey, you know what? If I had the chance to trade $1 million account, I would be a great trader. I would be making a lot of money. But some others say like, hey, if you can't manage a $5,000 account, you're not going to be able to manage a $1 million account. Is there really any difference between being a retail trader and a hedge fund trader?
Yeah, 100%. Like, I honestly, knowing how to trade, once you learn how to trade properly, it's quite simple. Trading is quite simple. The problem is psychological. So like at the firm I am now, we have traders come through the doors every year, all the time. Lots and lots of traders come through those doors. And what happens is that one of two things will happen. Either they'll have this great track record and then they'll come under pressure. So we'll give them a company account, or they'll start trading for a client account, and they'll just crumble under the pressure. So as soon as the accounts get bigger and the pressure's on, most people just can't handle it. They just crumble, and that's the end of that. And they go out the door, and they have to realize that they have to get a job doing something else. It's very brutal, the trading industry, professional trading industry. Or the trader succeeds and they can handle it, and then they carry on. So there is a massive difference. So if someone came to us and said, oh, I've absolutely smashed it on $1,000, I've made way more returns than you, I'm a better trader than you, which I have heard before, I'd say that's fine. You know, I want you to be a better trader than me, because that's great. That's good for our business. But can you do it on $1 million? And very often they can't, basically, or not even just $1 million. This is generally the one that will get most people is, I'll give you a $10,000 account, but it's being watched by everyone. All our existing clients are watching it. All our IBs who can raise you lots of money are watching it. You now need to perform. And at that point, that's when most people just crumble. They can't do it. So definitely 100% makes a difference, that environment versus just you in your pants trading your own account. 100% makes a massive difference.
What would you tell a trader that's going to have that opportunity so they can do something or train their mind or you know, like manage that pressure to be successful on that? Because I think that the dream of a lot of people is like to become a hedge fund manager or start managing a friend's money or family money or things like that, so they're not gonna get blown with that chances.
Yeah, 100%. So the program that we started off, that we offer to retail traders, the education, the training program, is basically like if a guy came into our offices in London and we sat him down at a desk and we trained him, he became a junior trader. He would go through a process of learning. So he would learn, he would then practice, and he would then develop his skills. And that process is the big part of that is psychological training. Like, psychology is the biggest part, effectively. So once you can trade, that I could teach them how to trade in a week. Honestly, it's not that complicated. The tricky part then is having the discipline, the focus, not crumbling under pressure, not blowing your account. That is the hard part. And so the biggest focus on training a new trader is all about the psychological training. So the online program we've done basically is designed to just replicate that exact same training process, except in an online environment, because of retail traders from around the world. So you'll find if you look at that program, a lot of it is the psychological side. So we've got like one of the best the top trading psychology coach in the UK that works with all the hedge funds, the top 10 investment banks in the UK. We actually employ him to come in and work with our junior traders, and we do the same on the retail website. He comes in and does webinars. He's produced a course, because that's the big focus. So effectively, once you get past that point, the focus should be on the psychological side. And if you can focus your psychology and nail that, you know, then you're in a prime position basically to, you know, to take those challenges on effectively.
Okay, that's great. That's great. Well, the next question is pretty much, what is your most powerful trading tactic you have right now? I'm not sure if that overall it's fundamental, but if you can start sharing a bit of that with us, would be amazing.
Yeah, of course. So basically, the best trading tactic I have at the moment is it's a very simple one. It is fundamentally based, and the way I'll explain it is basically you take the event calendar, the news calendar, okay, for the coming week, and you look at what events are coming out for that week, okay. So you can see what big impact, high impact events are being released. So it could be data, it could be a central bank meeting, whatever it is. Then you look at that, and then you look at the big picture on each of those currencies, and you say, okay, what's the big picture here? What's going on? So I'll give you an example. This is an example of a trade I took. It's a few months ago now, but this one sticks out in my mind as I'm talking to you. So it was on the pound, and it was kind of like towards the tail end. It was like autumn, maybe tail end of summer. And at that time, we just had a Bank of England meeting where the Bank of England had been quite hawkish. They'd said, basically, we're still going to hike rates. Nothing's changed. It's all looking quite good for the next 12 months, etc., etc. So that would give the pound some support. Okay, so everyone's like positive about that. So this was on like the Thursday. Now, if you looked at the calendar the next week, you can see on the Wednesday, we had average earnings data being released on the UK. Now, obviously, you have to understand the background and you have to be studying this stuff, but effectively, that average earnings data was expected to be really positive. So we had a situation where everyone was, the Bank of England were hawkish, so the pound was supported, going into some data that was expected to also be really positive because the expectation was it was going to come out better. So there's only one real way that pound is going to go in that period window of time, and that's to buy it basically, because it's coming out of something really positive, going into something that's expected really positive. So that's how I trade. I trade those news events and the calendar in that way every week. I just look for those things, look what the big picture is, and look for those opportunities where a currency is only going to go one way, out of something really good or bad, into something that matches that basically. That's probably my top tactic, if I was going to simplify it all down.
Sorry, I lost you. I just got stuck. Then you were telling us that the Bank of England said that everything was going to be okay for the next 12 months. And then next Thursday was something.
Like average earnings data it was
okay.
At the time. The background, do you want me to go through it again?
Sure. No. On the background. No, okay. No, simply that.
Okay. So basically, it's just simply trading out of something really positive into like either some data or another thing that's going to be really positive as well. So if you can get two positive things, so that the currency will go up coming out of it, and it will keep going up going into it. Basically, those are the opportunities that will give you very high probability trades. That's what I tend to focus on.
So pretty much when you have an overall idea that the central bank of somewhere, in this case, England, was saying that everything was okay, the economy is going to be okay, that means that the pound's going to get strong, I think. And then another news release that it's confirming that point of view from the central bank is also right. In those scenarios, you're trying to go in favor of the pound in this case.
Yeah.
And that works pretty much with the central bank point of view plus any kind of high impact news release, or it's certain kind of them that you analyze.
Yeah, so it's got to be related. So for example, like here in this example, we'll keep with the Bank of England example. The Bank of England were focused on two things. Before they hike rates, because that's what it's all about. We want to know if the bank's going to hike interest rates or reduce interest rates. If it's going to hike, the currency will go up. If it's going to reduce, the currency will go down. Very simple. So The Bank of England said at that time they were focused on two things. They want to know whether inflation's going up, and they also want to know whether the employment market's stable. So any data relating to inflation or the employment market, if that data is positive or even expected to come out better than it did last time, okay, then the market's going to focus on the positives and it's going to buy the pound, because it's going to think, okay, this data is expected to come out good. It's all been coming out good in the past few weeks. So the Bank of England have got no excuse not to increase their interest rate now, because that's what they said they were looking at. So, it only makes natural sense that the thing's going to go up. So you do have to have a certain particular type of analysis. You have to understand the big picture, but it honestly is not that complicated once you get used to it. It's very simple, and once you have all the stuff in your head, it's literally a case of looking at the calendar, seeing it, and these trades just tend to jump out at you, quite often, because you already know that big picture and you're already clued into what the data's been like. So once you see things, it's just quite simple process.
Once you learn all that stuff, and you were talking about discipline and the right mindset, and psychology, trading psychology, how would you recommend people like to start creating their daily plan, not only their trading plan, but their daily plan? I think that to get into a routine, I mean, when you were trading, or I'm not sure if still now you do that kind of routines, there's something that you said like, hey, okay, every Sunday I read this kind of articles, then every day I have this. So I start looking for that, some data. Or how was that way to build a really nice routine for being a trader? It doesn't matter if it's technical or fundamental, but the good way for you to create a routine as a trader.
Yeah, well, the routine, I guess, you need to, well, I mean, I was like, obviously since I started working in London and stuff like that, my learning, my education is never ending. Like I always, I'll meet, for example, recently I met a trader who makes like serious amount of money from his trading, and he will teach me something, or he will say something that I'm thinking, oh, that's a great, that's a really good idea. That's a really different way of doing things. So you're constantly learning, but generally the structure of a routine doesn't really change. So for me, for example, the first part of the routine is research. So you need to always know what's going on, and that you can only do that by just reading. So I've got apps on my phone, news apps and stuff like that. So I just constantly, if I'm like, maybe, I don't know, just sitting around somewhere waiting to go to a meeting, or in the car, whatever I'm doing, just sitting around, I'll just be reading the news. Like it's like a flow. But like when I come to my screens in the morning, the first thing you do is you research the big picture, you research the little picture, what's going on today. Then you look at the price of the currencies, what's happened. Then you think where the price should be relative to what's happened. And then you just start to see opportunities. So it is definitely a structured approach. And I would say that the structure for me is obviously research, then you look at prices, and then you look for opportunities, and then you trade basically. And then the discipline is all about sticking to your risk management effectively. There's no, in my opinion, there's no need to stick to a specific strategy, like, a specific way of entering or a specific way of exiting. You could do that, that's fine, but that's not going to really make or break you. What will make or break you is your discipline and sticking to your risk management, basically. That's what I would say needs to be the most rigid thing.
Okay, and now that you touched that point about the risk management, there's a lot of things while you read through the internet that you never should risk more than from 3 to 5% per trade of your account, at least when you're trading on a technical basis. Is that kind of a rule you follow on the hedge fund, or that depends on the strategy and or how many trades you take a day or a week, or how would you define what is a good risk to take for that kind of the risk management?
Well, where we operate, the way our firm works, for example, is we have lots of different clients, lots of different types of, some clients want to put their pension. We have like self-invested pensions, so people put their pensions in, and they want something quite conservative that's just going to grow over time. No risk, no volatility. So for that, we don't use any leverage. We just use a very, very simple strategy. Where then you get another client who comes in and he's got like, maybe a few million of risk capital, and he wants to put 100,000 in like something really, intense. He wants to try and do 100% a month, right? So he knows there's a very high chance he could blow his account, but he's looking for a really talented trader, put his money in and just go for it. That's just two examples. There's lots of examples in between. So leverage depends on what the client is looking for, first of all, because at the end of the day, we're there to serve the client. My personal approach is I don't use leverage. So if I'm trading a standard client account, I won't use any leverage. I'll aim for 20% return per year. So if you've got $100,000 in your trading account, as a very rough guide, each trading position I open will only be one standard lot, no more. Okay, and that's an unleveraged position, which means that basically for every 100 pips you make or lose, that equates to 1% of the entire account. So that's the rule I use. So if I use a 30 pip stop, then I'm only risking 0.3%. If I use a 100 pip stop, then I'm risking 1%. That's my particular approach to doing it. But like risk management is all about just controlling the downside. So whatever you agree is a maximum downside, whether it's 10% of the account, 50% of the account, you have a strategy for ensuring that the downside never exceeds that, whatever the agreed point is. And once you have that strategy, then you need to stick to that risk management strategy. That's the most important part. So, there's no need for a specific, everyone has got different needs and requirements. But once you have a strategy, when you're managing clients' money, once you've agreed a strategy with the client, absolutely cannot deviate away from that, because that's when being regulated, that's when you get into trouble, and that's when things can go really bad. So that is, we've got a whole team of risk management and compliance. So if a trader's trading, they will be monitored, and if they do something that's out of those parameters, outside of their agreed policy, the risk management team will step in and cut it off and adjust and do what they need to do to make sure that the risk management strategy is adhered to, basically. It's taken very seriously, but generally that's how it works.
Okay. Yeah, it depends different styles, and depending on the money that people are risking. I mean, that would be really, really important. Okay. Yeah. At this point, why do you do what you do? Like, what is your purpose with your business, and how has that helped your business to grow?
Well, the why I do what I do is obviously primarily to make money, but I enjoy what I do. Like, no one will ever be a good trader if they don't enjoy the process, like the research, the news, looking at what's going on, understanding what's going on, understanding the markets. If you don't enjoy that, you'll never succeed. So I enjoy it, but I also have a flair for, I've worked for myself since I was like 17 years old. I've never really had a job. I've always worked for myself and built my own businesses, inside and outside of trading. And that's never left me. So my real goal is not just to be sat in front of 10 screens every day trading the markets. That's got me to a point, but then you get other goals, like we talked about earlier. Your goals change and develop, and then you want to do other things and other projects. So I do what I do. Basically, everything that I'm doing right now is A, to get me to my next step, which is my next goal, and B, because I just love the process and enjoy the whole process of doing everything that I do. Basically, they're the two main reasons.
Okay, that's great. That's great. And I think that's really important, because a lot of traders start with the reason of having more freedom, and suddenly they became slaves of trading, and they are not managing that. So it's really important to stick with your purpose, like to be aware of which are your goals, how are you improve them or getting closer to them, but at the end, remembering why are you doing it, and not just simply start being a machine that find another slavery job in front of the charts or the news simply because that's making money. But I know that part of making money, it's because with that you can leverage a lot of things on your lifestyle, and that's great. That's what I do it also. So that's amazing. Have you let's see it. Have you been inspired by someone in your trading career?
Yeah, I've been inspired. Yeah. Like when you go in the city and when I started working at Smile and you get in that environment, because when I was a retail trader, all I wanted to do was just understand what these boys, what these big boys are doing. When a trader comes to his desk, and you see on the TV, and you've got all the desks and the screens, and when he comes to his desk, what is he looking for? What's he doing? What's he thinking? That's all I ever wanted to know. And when you get into that environment, which I did, when you're immersed in that, like you just learn so much and you meet so many people, and the stories that you hear, like, are just like incredible. And there's definitely been people. So, you know, my best friend that I talked about who introduced me to fundamentals, his sole source of income for like pretty much his whole entire adult life has been trading. And where I am right now, I know what a stressful thing that is. Like, you know, when I was going through that same period, obviously now I've got other, you know, we've launched this other retail program. I've got various other businesses that I run. I've got the managed account program that I trade for clients. I've got lots of different things going on. He literally had none of that stuff. He was literally focused for 10 years just trading his own money. So when the markets was, you know, really hammering him and he was down, he'd such a stressful thing for him to be able to do that for such a long period of time. Like, that is very inspiring. The first thing, just to see that in real life, someone doing it. And then you got, you know, guys that I work with at the firm, you know, guys that have been there for like, they've been trading for like 20, 30 years. You know, they didn't necessarily trade FX. So for example, the one guy I'm thinking of, he traded bonds. But, you know, the stories he's got of, you know, they had an arcade and they were running the floor and they had all the traders there. And, you know, he'd be making like 50 grand in a day. And then the next day he'd maybe lose like 50 grand, or, you know, it's just like having those swings. And then he came out of it and, you know, he worked at like a big bank like JP Morgan, and just the experience that he has and the stories he can tell and the advice he can give, you know, when you're in a position and you're down and you're going through a difficult time, you know, he just listening to those people, having those kind of people around you is very inspiring. And basically reaching that level is what I aspired to when I first started doing that. So yeah, definitely, I could go talk about this all day, basically, but the amount of people that you meet and the stories that you hear.
And that's great, if seeing that great traders like you have been inspired by others, because pretty much that's the purpose of this summit. So people can get inspired from other traders that are human beings that have struggled, and after that, you know, like grow and having business the one you have right now. Okay, so you already told us about when you jump from the technical to the fundamentals because of your best friend and stuff. But right now, why are you still trading the fundamentals? Can you explain us, why do you prefer the fundamental style? Why do you have an entire course about it? Why do you create Smile based on the fundamental trading?
Well, because like that's what everyone else is doing. Like, if you go into another company, another firm, a bank, a fund, they are trading fundamentals. Like, no matter what, you know, you might read something on some forum or a website, you know, or so you might get some marketing email trying to tell you otherwise. Just go and see, basically. If you can get an appointment to go and have a meeting in one of these firms, even though it's a little firm, just go and see for yourself. Go and do the research. You know, there's no professional trader managing a book of clients isn't sat there looking for when MACD crosses over and, you know, what the, you know, Warren Buffett, for example. This is an example I like to use. Warren Buffett's the greatest investor of our time, right? He's, you know, one of the richest men on the planet. He does not look, he did not, I guarantee, look at the Coca-Cola chart when he was thinking about buying it. He wasn't looking at the price chart thinking, oh, should I buy Coca-Cola? Is this a good price? He was looking at the actual fundamentals of the company, you know, the value, the intrinsic value of that company. Is this a good company or not? And the same is true of any market, whether it's oil, equities, FX. So when I'm thinking about buying or trading a currency, the question is not, you know, is the pattern there? The question is this currency fundamentally strong, or is this fundamentally weak? Should it be going up or down? Has the market given me an opportunity? Like the stock market, for example, might collapse 30%. Well, that doesn't change the fundamental value of the company. All that does is show that they're panicking based on emotion. And all of a sudden, if you know what you're doing, you've just been given a fantastic opportunity to buy a really good company at a really cheap price. That's how it is. And then the markets go up. And if you look over history at the stock market, you'll see that's what happens. Currencies, every other market's the same, whatever it is, including currencies. Currencies you can trade a bit more short term. But the reason I trade fundamentals now is just simply because that's what it is. And if you want to know that for a fact, you know, if you want to get a little insight, go to the calendar, look for high impact events, and just watch the market on those currencies as that news comes out. Just watch it. You'll see there's traders there pushing the button. They're reacting to that fundamental news, you know. Central bank meetings. Look at a news feed. Like, you can get a professional news feed. Obviously, that's part of our program that we do. But professional traders are literally, you've heard of things like Bloomberg Terminal, Reuters Icon Terminal. These are iconic trading tools that people use, hedge funds use. And it's not because they got charts, it's because they've got it's a news flow, right? It's the news flow. So if you can access this news flow, there's retail versions available. Look at the news flow. When something happens, you will see the markets react. You know, the Swiss franc increased in value by like 40% in January last year or the end of 2014 because the SMB removed the floor. Nothing to do with the price charts. And you see that move. As soon as that comes over the wires, instant, because that's what the professional traders are looking for, basically. So in my opinion, it makes sense. If that's what everyone else is doing, that's what you need to be reacting to, because if that's what's going to move the markets, that's what you need to try and be anticipating to be in on those moves, basically. That's a simple answer to that.
Well, that's great. That's amazing. Because I mean, I came from a really technical current that says like, hey, you know what? The news are only gonna affect the volatility of the market for the next 15 minutes to 3 hours. It's not gonna be a big deal. It will only put some fuel to your trade to get faster to your target or faster to your stop loss. But it's more from the price chart action where you can have something. And hearing you saying that there's something, you know, like bigger behind that, and that actually currencies are related to, you know, to political decisions, that has a lot of impact on them. So I think that being able of learning how to trade that would be an amazing opportunity. So I think that's great.
Yeah, like let me give you another example, just based on what you said about, you know, the short-term impact of the news. So in April 2013, the Bank of Japan implemented their QE program, which basically involved printing money, which is going to devalue the yen. You can go back and Google it. Just Google Bloomberg articles from April 2013 and around. You can piece it together. At that time, we were looking at that going, okay, dollar yen is going to go up. The bank themselves were saying they want to target 110 for dollar yen. At the time, the price was at like 90, right? That's not going to happen in 3 hours to 5 minutes. That's going to happen over 1 year to 2 years. Like, that was the easiest money you could make by just making sure you plan your trade and position yourself correctly. Because obviously, in the short term, there's going to be times where dollar yen is going to fall. You know, for example, particularly on safe haven stuff and stuff like that. But that's where tuning into the short-term sentiment will keep you safe. But overall, we know almost for a fact, as long as the Bank of Japan keep devaluing the yen, it's going to keep dropping in value. So no one's going to want to be buying something that they know is going to be worth less in the future. It just makes common logical sense. So it's going to go from 90, it's going to go up to at least 100, and then to 110, and then wherever it's going to go. That's like thousands of pips over like a 1 year or a 2 year period. That's a very simple illustration of how the fundamentals work, basically.
Okay, that's amazing. That's amazing. I think the people who's watching us right now are gonna really enjoy and start going through the news release and all those things that were happening, so they can start learning how the market reacts actually on the long term in this. And I think that this is a thing with Forex, that people are not thinking on a long term as a long term. What I have noticed that people think that being a long-term trader is pretty much being a swing trader. So if you go to the daily charts and you have the position open for an entire week, you are kind of a long-term trader, because there's a lot of people trading the 15 minutes and the 1 hour. So I think that this idea of short-term and long-term is not as real as what the long-term means for a central bank or for an economy or for something bigger. So I think that learning that point of view of what's going on for the next 2 years because of this central bank decision is different than saying, hey, you know what, it's non-farm payrolls, they get better on 200,000 new claim jobs, whatever. So it moves the market for a bit, and what actually it's behind that. And you know, I recently started learning about fundamentals because of you, because I found you on the internet. I'm pretty much been following you for around 5 months, watching your YouTube videos on and the thing you said. And you know, I would be a trader that never pay attention of what was happening with the Fed putting high rates, you know, hiring
Yeah.
the interest rates. and being with you, learning from that, and knowing that right now all the economy, the Chinese, what's happening in China, and I know that right now it's a lot of, like pressure and uncertainty about the markets of what's going on, but having the idea of, hey, that what's going on right now, it's actually gonna determine what's gonna happen then, because we're entering a really rough time in the global economy. So I've been learning a lot, and I admire that, because you pretty much changed my chip about fundamental analysis. And last week you put a signal on selling the Aussie at one point, aiming for something before the unemployment news of Australia, and it was amazing. Like, I had a really close technical analysis of what you were doing, but looking at that with a fundamental point of view was like, hey, so I can start mixing them up and start getting better. So
Yeah,
so that was amazing. And I'm pretty sure that people are going to start learning a lot from you.
that's cool.
Do you have any trading book you recommend?
Honestly, I would. Yeah, there's a few. Like, I think if you can focus on psychology, like Martin Douglas was a great author, Trading the Zone, stuff like that. That's a good one. The other one I really like is, like, there's one called Own the World, and that's basically about like the concept of investing and how to preserve your wealth and make. Basically, it's the concept of how to make your money become worth more. So it's not necessarily trading, but the principles are behind it are like the underlying principles behind trading. As a trader, you're trying to find value, whether it's short-term value, long-term value. Even if it's only a trade that's going to last like a day, you're trying to find value in the short term. Is the market giving you an opportunity to get value? That's a really good book. Those two books, I'd say, Trading the Zone and Own the World, are really good books that I would recommend.
Okay. Own your own world, or own the
Own the
world?
World, yeah, Own the World.
Own the World and Trading in the Zone by Mark Douglas. Okay, those are great. What what would be the golden tip you can give today for our audience as traders?
That's a good question. The golden tip I would say is, okay, this is probably it. Don't, like, knowledge is not the key to you being successful. Okay. So once you learn the correct way of trading, which is fundamentals, I mean, I'm not saying technicals is useless, because, like you said, you can combine technicals and fundamentals beautifully. Okay, but you do need the fundamentals, and the technicals are probably will make it better. So you need the combination. Once you've learned that, once you understand how the markets operate and why the price moves, you don't need to know anymore. You don't need to keep trying to find a different strategy or a different, like, system or some more knowledge. You don't need to do it. It's a waste of time. Okay, it's the equivalent. The example I use is like, if you learn how to play golf, right, then the first thing you need to do is have a lesson. You need to learn what clubs to use, how to swing, what you're trying to achieve. Once you've had a few lessons, after that point, it's just practice. Just keep practicing those techniques. Okay, and then once you've got to the point where you've mastered it and you want to go on to compete, whether you or not you win a tournament will be down to your psychology. It will be down to your head game, basically, because you're not going to lose your talent. The game of golf isn't going to suddenly change, overnight. That stays. What changes is you and your mindset and how you can handle pressure and how you can cope. So I'd say, if you've wasted years searching from system to strategy to system, different things, you're never ever going to end up doing what you're doing. But at the same token, if you're trying to play golf with a baseball bat, you're never going to get good no matter how much practice you get. So you need to learn the correct way of doing it. But so it's a very short process. After that, it's about practice, and then it's about your head game and making sure you've got the psychological side. So the biggest tip will be, don't get sucked into that, switching from one strategy to the next and trying to increase your knowledge, thinking that's going to help. Just follow that very simple process, and you'll have a much better chance of success.
That's an amazing tip. So thank you about it. Okay, so when I start contacting you for having this great interview, and it's because what I told you, when I learned from you and when I start knowing about you, it was like, okay, so So I've been trading for 8 years now, and I never trade a news release. I tried it at the beginning. I never understood them. So for me, it was like, hey, you know what? I'm gonna ignore them. And since 6 months from now, I'm start seeing like, hey, I have this knowledge. I'm trading okay. I'm doing it well. But right now, I'm I'm having the chances of learning from another point of view, and I want people to have that chances. So I would love to have this chance, and I know this is kind of a surprise for the audience, in which you are gonna share your knowledge from Smile with the audience through a special link that we have set up that it's called forextravaganza.com/smile, in which you are going to let people learn from you for 30 days.
Yeah.
So that's amazing. So I would love to, if you can explain a bit more to the audience, what's this gift and surprise going to be about?
Yeah, so like I mentioned it earlier, so effectively, imagine if we obviously we're our office is in the city, and we're a professional investment firm. So imagine when we get a junior trader come through, he's completely green, he doesn't know anything about it. He's obviously got an interest in the financial markets, or her, could be a boy or a girl. We basically sit them down, we take them through, like I said, that process. So first of all, we'll teach them what they need to know, how the markets work, how prices move, where to find value, how particularly what affects currency markets, how to trade, basically the process, what they need to do, the daily structure they need to follow, etc. Once they've learned that, the next step is for them to practice it. So then we'd set them up with an account, and we'd get them pushing the button. We'd get them the news feeds on, we'd get the squawks on, we'd get everything going. They're then sitting down, applying what they've just learned, pushing the button, taking trades, okay? Just to get that practice and start that process of you getting that underway. And then as they're doing that, we would then give them, we have Steve Ward coming in, the psychology coaches. We have them coming in, sitting down with sessions to help them work through any issues they have, any problems, anything that's roadblocking them and holding them back from making money. And then that's the process. We then guide them and mold them and try and get them to that point. And then after a point, they then have to trade a company account or a client account, and off they go, and they either fly or they don't, basically. But that's the process that we take them through. And some people just can't get the head game. Some people just realize that it's not for them. But the fact is, that's the process we take them through. And then some traders go on to make lots of money, and they become one of our best strategies, etc., etc. So what we tried to do with this was say, okay, it's impossible for all these retail traders to come in to do this, because there's not enough desks and it'd be too expensive. It's just not practical. So what if we take that process and put it completely online, so that everything that a junior trader would get, we can put in an online environment, and just let the retail traders see. This is exactly what you get. You can try it for free. You can see, and these are the tools you're going to need to use. This is the same thing you would get if you came into our office, our firm, as a junior trader. That's basically the simple concept behind it. That's what we're offering here. That's the simple, pitch, basically.
And this junior training, it's focused mostly on the fundamental, or it mix both, or how is this going to be? Because I'm excited about it.
So like obviously in that environment, the junior traders would get physical people coming in. So you get the psychology coaches, you get technical traders coming in giving presentations, you get analysts coming in giving presentations. So they learn, from these different experts in their field. And we've done the same. So they come in, you get the course, you get I think it's like a 20-hour course. Big part of this is psychological. So I've done the course. This is the course that we use. So you go through that video course. It's fundamentals, it's technicals, everything you need to know basically about how to trade the markets. So there is technical included, technical training. There's also psychological training, risk management, everything you need. Once you've watched the video course, then we've got the daily webinars, because that replicates every morning. We have a session, an analysis session. So we all meet, we have a quick chat, what's going on in the news, what we're trading today. We replicate that process in the members area. So we've got a team of analysts that come in, take it in turns to run that session, take you through the exact same process that we follow here every day. This is the news, this is what trade we're looking at. To replicate it basically. Then you've got the news feed. So then once you've got that, once you're primed for the day, then it's on you to go and get your account, go and do the research, look at the news feed and the tools. Every time there's a trade opportunity, then you can take it or push the button. And then on top of all that, we then give research. So we research every central bank. So you can basically read that and know exactly what the big picture is. So kind of like stabilizers on a bicycle, basically. We do all that work and the research and the tools and the education. It's like a process. And by the end of it, you'll be then ready to you'll know exactly what you need to do. You'll know how to trade on your own. If you want to keep those tools after, that's fine. You know, there's a small charge for keeping those tools because they cost us money to produce. But ultimately, the goal is to put you in that place, you know, and show you for free. We don't need to charge at the front. You can see for free how effective they are. If you think it's effective, great. If not, that's fine. But that's basically, we try and keep it as simple as that. The whole process delivered straight to your online portal.
Well, that's amazing. And thanks for sharing that with all the audience, because I'm pretty sure that a lot of people, it's going to go right now to the link, you know, forextravaganza.com/smile and go and learn from you and start seeing how is to be a professional trader from a hedge fund. So thank you very much for that. I know people is gonna love it and get the best out from it.
Yeah.
So, okay, now we're getting closer to the end. I'm going to shoot my last question, and this is going to be kind of a fun question. So I would like, you know, so we can give the audience a glimpse of your life outside of business. So, you know, what's one thing that most people don't know about you? For example, I ate my nails, I bit my nails for around 20 years. I stopped, I think, like 5 years from now. So what's something that most people don't know about you?
Well, something that I think probably the most interesting thing, considering what I do now and where I came from, is the very first thing I did. I used to clean windows for a living. I used to be a window cleaner, and I've got no qualifications. I don't have a degree. I never went to university. That's considering what I do now. I think that's probably one of the most interesting things about me, considering where I am now, that I don't have those traditionally required things. Yeah, so that's probably what I'd say.
Well, then thanks for sharing that, because I know that there's a lot of people who think that they have to be graduated from Oxford or Harvard to be successful in life, you know, and turn into a businessman. So start as a window cleaner. It's amazing seeing where you are right now.
Yeah.
Hey, Jarrat. Well, thank you very much for being here. Thanks for sharing those tons of great value with us, because I've been learning a lot from you lately. I know that a lot of people is going to keep learning a lot from you. So thanks for being here, sharing this interview with us at the Forextravaganza Virtual Summit.
It's been a pleasure, and thanks for having me.
Okay, so, well, guys, I hope you enjoyed this interview. Don't forget to go forextravaganza.com/smile and join for that 1 month, 30 days period to this training, so you can learn, and who knows, from there you can end up managing some funds or something. So go and learn, because that would be amazing. Thanks for being here once again. I loved of sharing this time with you. So, well, thank you. I hope to have you in another time, another summit we do in the future. And I hope a lot of people go to that link and start learning a lot from you.
Thank you.
Okay, guys. So see you in the next interview. Take care. I'm Jorge Espinoza, and this is Forextravaganza Virtual Summit. Take care. Bye.